My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome, everyone. Today, our special guest zooming in from Central New Jersey is David Hansel. David is a very experienced real estate investor. You wouldn't know it from looking at him, but I think he's been in and around the business for over 20 years. And these days, focused on flex industrial properties. And we had the pleasure of interviewing David a couple of years ago. We're going to circle back, see what's new, what's going on, what's shaking with David Hansel. Welcome to the show.
Thank you. And I appreciate the compliment. I'm 50 years old, but probably don't look a day over 40, you know?
There you go. And I'm 35 and don't look a day over 62. No, I'm not 45. I'm 57. So anyhow, David, give us a little snapshot of, I mentioned it, but what do you guys invest in? What's the asset class? What does the portfolio currently look like in the end of March 2026? Just give us a snapshot.
Sure. So we're focused right now primarily on small bay, multi-tenant industrial in densely populated or high growth markets on the Eastern Seaboard, with a lot of our holdings in the Carolinas and Maryland. We have an asset in New Jersey as well, where we live. We're very bullish on the asset class, and we'll dig in a little bit on that. We've been acquiring these types of assets for the better part of 3, almost going on 4 years now. And we trade in and out of these assets relatively quickly, typically 2-year hold period, but we have about 250,000 square feet and growing of assets under management. And we're continuing to, buy and identify these opportunities.
Okay, so for folks that aren't familiar with what the heck small bay flex industrial is, paint me a picture of what one of these things actually looks like, who uses it, how many different bays or units are there, kind of paint a word palette of this.
So when people think of warehouses, they usually think about the big warehouse. They're driving on the highway. It takes 30 seconds to drive past it. And
like an Amazon type thing,
right?
Or something like that. Yeah.
Small bay is different. The square footages of the buildings typically range from 20,000 to 100,000 square feet, with the tenant base being average, generally in the 2,000 to 4,000 square foot range, depending on what you're buying. It can vary. We have tenants as large as 18,000 square feet and as small as 1,000 square feet. But the idea is that you have multi-tenants in the building itself. We're just closing on Monday on a new asset that's 75,000 square feet, has 19 different tenants in it. The average is a little over 4,000. That's offset with 2 very significantly larger tenants. But it's kind of like if you've driven through an industrial park and you see that garage bay door, and then there's a regular door to the office area next to it. That's kind of the quintessential small bay industrial space.
And who would be the bread and butter tenants for these kind of properties?
So there's a lot of tenants that call these types of properties home. Everything from all of your service related contractors, from HVAC, plumbing, electric. You have small manufacturing, last mile distribution, sometimes automotive uses. We've had all different sorts. Sometimes you'll have a gym, but it's kind of, I always say that small bay follows the growth of the rooftops. So a lot of what these tenants are doing are servicing the local county or neighboring counties, and they provide some kind of service or product. Others are doing some larger manufacturing that's nationwide, but it's a pretty diverse tenant base, even down to some people that use for their own individual storage. We have an asset not far from our office in New Jersey. We just put a new tenant in without having a vacancy. We have a tenant that occupied 2 suites. They needed to downsize to 1. We pre-leased to this other gentleman who is keeping it for his private car collection. So you have all sorts of different uses.
Okay, very cool. So I got a couple of questions for you, David. The first one is, um, without getting too much into the weeds, what are the big broad stroke benefits of small bay industrial or flex industrial versus other real estate asset classes? Like you mentioned that you've been hard and heavy on this for the last 4 years or so. You've done other stuff in the past. So maybe compare and contrast this with other things.
So the most basic item is the supply demand issue, imbalance rather. There's limited supply, especially in these densely populated and high growth markets. Zoning doesn't necessarily permit for much more of the construction of this. And when it does, the cost of construction far exceeds the cost of acquiring existing assets. So it's very difficult to add new inventory into these markets. We had been involved a lot in multi over the years. Some of the other really nice benefits is your variable rate costs are a lot more predictable because either all of our tenants are when we acquire or we'll transition them upon lease renewals to triple net leases, which means they're responsible for the expenses of the taxes, insurance, and all the repair and maintenance. So it allows you to have more predictable cash flow. But the supply issue is the biggest driver of this space, and it's creating a lot of demand, which makes it a little more challenging to find deals. But we've gotten really good at that, and that's between that and like operations are the two most important factors in terms of having a successful investment in this space.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Okay. So supply and demand and triple net leases, yeah, big benefits there. Now, maybe explain a little bit about your business model, because I think you said that your goal is to be in and out of these in like 2 years. So maybe explain how that whole thing works and why.
Like a 2 to 3 year time frame. There may be some stuff that we longer at 5s, but most of it is shorter duration. And the reason why is there's kind of like multifamily going back almost 10 years ago. There's a supply issue back then. There's no supply issue anymore. It's the reverse. But structurally, we can't fix that in the small bay space. But there's older ownership where there's opportunities because these leases are generally 1 to 3 year leases. There's an opportunity to mark to market. So you can come in, maybe there's a tenant paying $10, $12 a square foot, but the market is $15 a square foot for a similar space. Upon renewals, we can quickly move them up at or below that 15 mark. They're not going to have any other place to go. They're going to want to continue to stay. If they leave, it's easy to fill. So we're able to do that. We generally come in and put some healthy amount of CapEx in, repainting or surfacing, maybe some roof work, maybe some work to the parking. But we show a little pride of ownership. It allows us when we go to move the rents up. So we're able to create a lot of value in a short period of time. And so we create the most value in that period of time. If we could continue to hold, but we typically exit. A lot of our investors that participate in our deals like coming in and out of the deals on a more frequent or regular basis. There's pros and cons to that, but that's why we are able to do that. We come in and our value add type investors. And that's what we were both in the multi and now doing that in the industrial space.
Well, I'm glad you kind of explained that. That makes you got a lot of the lift right up front there, so you're creating the biggest bang for your buck within those 2 or 3 years.
Right.
But I'm just kind of wondering at what point, like if it's such a restricted market, like at what point does it make sense to do that and then just hold on to it
Sure.
forever?
Um,
Like, I
yeah,
mean, like that kind of thing.
um, I think for us right now, there's definitely an argument to be made to say, why don't you refi and hold on? I think that our value is on the execution of these deals, and we
Mhm.
can take dollars and then redeploy them and make more dollars on that. The other thing is that a lot of institutional money has had a difficult time finding its way into the space, but they're starting to crack the egg, so to speak,
Yeah.
by buying up bigger portfolios. So you're able to aggregate a lot of this stuff. And I think there's a lot of runway still left, but I think also that that market eventually will taper down. The supply issue isn't going to go away, but rental increases. First, second gen rent increases. Getting third gen rent increases may be challenging. So
Mhm.
eventually, if the institutional money does find its way in, it's going to compress the cap rates, drive prices up, and eventually it's going to get to a stagnant point. So we kind of like coming in. We're really strong on execution in terms of value add. That's what we're really good at. And, for now, that's what we're going to stick to. But there will be assets that we do acquire, and there's one or two in the portfolio that we may hold longer. But in general,
Yeah.
we like to be in and out.
So it sounds like you've gotten very good at the execution, and part of that is finding good deals that you can execute on and add value to. Are you tending to work with brokers to find these opportunities? Are you going direct to owner? How are you drumming up most of these new deals these days?
Sure. I give a lot of credit to my partner, Frank Forte, who is amazing at acquisitions. And we have another gentleman that's on the acquisitions team with him, but just really good at developing relationships, not only with brokers, but owners. Like we've called on properties, or sometimes we find properties that we're interested in pursuing, and we'll go to the brokers and give that to them, ask them to pursue it on our behalf. So they are, I don't want to say indebted, that's not the right word, but kind of indebted to us,
Yeah,
that they
they're
do have a good
incentivized.
opportunity. They're going to come back to us. We take good care of the brokers. We go out to dinner and we're footing the bill a lot of the times, or we're wining and dining them. And unfortunately, a lot of people look at brokers in a negative light, and they're so valuable. A great broker is worth their weight in gold. But this latest acquisition that we have that we're closing on Monday, my partner Frank had connected with a gentleman who went to work for the company that owns the asset. They have a massive portfolio. The main owner has gotten out of the business, and the children are taking over, but they really don't want to work the assets. And he kept this rapport up, and literally once a month would talk to him over a course of 2 years. They came to us. They know that we're value add guys. They knew that this asset needed some value add execution. And they said, if you can make a deal with us that we're comfortable with, we'll move forward with you rather than going out to market. So
Nice.
um, each deal has its own unique thing. We're working on another project right now that we've been tracking for over a year and a half, and it's a condo association, and the main owner of the condo association wanted to sell. So we're working with him to collapse the condo association and buy out, force the sale of the other units, which we finally got after a 6-month process, got the other owners on board. So it takes a lot of persistence, and a lot of hard work and constant communication and relationship building.
Yeah, I would imagine. So it sounds like you got some great partners that you're working with there, David. What's your primary role within the company these days?
So myself and Frank share the operations of the company. So we both take an active role in that. I handle all of our equity raises and investor relations, our marketing, and then also most of our legal work. Frank handles most of the acquisitions and lease negotiations with tenants and things of that nature, and working with the brokers. So we have a nice divide, and we've got a great team of people that work with us. That we've got a small but strong, nimble team.
Very nice. So you mentioned that you're closing on a new property very, very soon. Congratulations on that. What else you got in the pipeline for the rest of 2026?
So it's been a busy, 25 was rather slow. We had two acquisitions, one at the beginning of the year, one towards the end of the year. This will be our third acquisition of the year. When we just disposed and sold one of our assets last week, that we had owned for a little over 2 years. But the pipeline looks pretty strong. We have one other deal that we're trying to finalize contracts on, and if that works out, we're going to be, probably looking to close that in June. But our acquisitions analyst that works with Frank is busy every day combing through deals. We have a couple other things that may come to the table, but as you know, being in this business, nothing's a deal until it's a deal. But we're seeing much more. We're getting many more looks this year at assets than we did last year. It seems like things picked up a bit.
Picking up. Interesting. Okay. So David, I know you guys are always looking to connect with potential investors and whatnot. Who else are you looking to connect with these days?
Yeah. So there's two things that make our business run.
Yeah.
Deals and capital. So we're always looking for new deals. Obviously, we always are building on our vendor lists and third-party relationships in the markets that we're in. We've built that up quite nicely, but we're always looking to connect with others. But resources for finding new deals is the other half of our desire of what we're looking for on a daily basis.
I would imagine. No, that makes sense. Fantastic, David. So if people are watching or listening to this and they say, hey, I'd like to connect with that fella, where should they go? What should they do?
Sure. So they could go to our website, which is lucerncapital.com. That's LUCERN capital, CAPITAL.com. There's a little chat bot in the bottom, and you can book a time to connect with us or send a message. There's an email there for info@Lucerne Capital. You could shoot an email, and happy to have a conversation on any topic that pertains to the industry that we're in. So
fantastic. Hey, David, thanks for being on the show again. It's really good to reconnect.
Yeah, appreciate it. Appreciate you.
All right, everybody, take care, and we'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.